There we go. All righty. Good morning, everybody. It's Wednesday, November 5th. Time for another Water Cooler Wednesday. We missed last Wednesday, just other commitments and such. But back, got another good case study for you. I got some comments about the industry. I'm joined by, as always, by Dwayne, and Dwayne's having a little camera issue. But Dwayne, how you doing?
Good. Good morning. How are you?
I'm doing good, doing good. You know, I'm hearing some stuff. And I'm curious about your thoughts
Mm,
in the industry, just in general. I don't know. There seems to
mm,
be some negativity out there. Is the economy good? Is the economy bad? Are we in a recession? Are we not in a recession? Is the stock market good? I mean, it's just there's just a
mm,
lot of stuff out, and I know we're getting towards the government shutdown, and I mean, just God, just bombarded with negative news,
mhm,
which I
mhm.
don't think is healthy for anybody. You know, you eat too much of it, and everybody starts getting more negative. And I know you deal with coaching people and such as well, so that's why I want to hear some of your perspective on it. But there are some very real signs that there's issues behind the scenes here. And you and I've always talked about when it comes to defaults on these type of mortgages that we buy, we watch credit card debt and not just the debt, but the delinquency on that, and we watch the auto debt and the delinquency on that. So I was putting together a couple of slides this morning from various sources here, but you can see the auto repossessions just in the past years at their highest level since 2009, which is an interesting date because in 2009, uh, I hope hopefully all the listeners or watchers of this understand what happened in 2009. I mean, that's when we
Mhm,
started having the crash, and that was the
mhm.
real estate market as well. So vehicle seizures are at the highest level since 2009. That's that ain't great. I'll just put it that way. Is that going to translate into delinquent mortgage rates and where will we start seeing more non-performing loans or not?
I
I don't
think
know.
I don't know. I mean, I don't think anybody can put their pulse on it. I think all the chatter that's going on in today's world about, cryptocurrency and, how market is swinging up and down so is so volatile. I know the stock market's up and then it goes down and people are worried, I think, of what the next step is, but and I would agree with you. I wouldn't worry so much about what the next step's going to be. I mean, go back, 100 years, and there's always ups and downs in the market and life, and we hear a bunch of chatter. And let's face it, news, and now with social media and with AI, there's so much chatter in the market that everybody, I think, gets so wrapped up in what's going on, and they lose focus on their game plan. I was talking to Mark this morning, and he and I were talking about people not staying on track and in course to their plan. Don't let something else. Granted, you can't change the market. You have to go along with the trend, but yet you really have to figure out what direction that you want to go. And I think that people really just don't know what that direction looks like for them.
Yeah, and to your point on social media, I mean, let's face it, they're experts in algorithms. And if you start to look at something, it's going to feed you more of that. And then
Sure.
you start to look at that, and it just feeds you more and more and more until I
Hmm.
think the next thing people get in their mind is, well, this is everything that's going on. No,
Right.
that's been, you clicked on a couple of things or looked at a couple of things that started feeding you
100%.
more. And now you're all of
100%.
a sudden that just becomes your world. And you got to be able to break out of that a bit and step back and keep it in perspective, and as I like to say, worry more about your economy than the
Exactly.
overall economy.
100%. That's what
And
I'm referring to.
yeah, and it's tough, but just back to this chart, everybody, and for those who are just listening to this, it does go through some ups and downs. And again, we're looking at the auto repossession increases. But when you look back at that, looks to me about 2019. In 2019, we were right about, I mean, that's almost exact, right? We're right about at the same level that we are right now on repossessions. But did we see in 2019 a big uptick in delinquencies on mortgages and everything? No, we didn't see it.
Right.
We didn't see it. And what happened? It went way back down. Now it's swinging back up, a little bit. But it's funny. Sometimes people get over their, I don't know, some of the decisions people are making on cars. I think that plays into it as well. We looked at a case study. I'm trying to think what deal this was, but we had all the information on the borrower because this was a new loan that somebody had just created. So it was a part of their creating that loan. They gathered information about this borrower, and she makes $1,000 a month in her job, and she makes $1,500 a month on disability. And I'm sure there's other government subsidies that come with that. Now, I'm not picking on that. I'm not,
Right.
let's not get political and blah, 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 and
That's
that
right.
stuff. That's just what the facts are. $1,000 a month, $1,500 a month disability. She has a $790 car payment.
It's ridiculous.
And you're like, what? What?
Well,
Uh,
let's face it. I mean, heck, I get all the time. I have a Capital One venture card, and I get emails from Capital One saying, "Hey, you want to get a car?" I mean, it has made it so easy to go buy a car, and
yeah.
people are looking for change. They just, you know, I think I think people are just drawn to the shiny object or want something new and thinking that's going to make them feel better. I need to get that. I need to buy that. And I think they just get over their head. They live way beyond their means, and we see it more and more each and every day.
Yeah, and so part of this uptick may have something to do with that. I don't know, but it's something again we monitor, but never, you know, I my business, your business, this chart's not going to change me where I go, oh, I'm not going to buy anything because I'm going to wait. I'm going to wait and see when these non-performing loans come out and be able to pounce on it. Not at all. Not at all. I'm going to continue to look at the daily inventory, and right now it's with performing loans. And if that switches, then I'll switch the other way as well. I don't need to try to make some future projection on what might happen. I can monitor that perhaps, but which I do, but I don't make immediate decisions. I'm not going to make, we saw that last time. How many people in this industry that you and I know, some of which that even teach this as well, they were several years ago. Oh, don't do this. Keep your powder dry. This is coming. This is coming. And it never happened.
Hmm.
And then you had all these people sitting on the sidelines waiting for this big event of non-performing loans, and it just never materialized. And in the meantime, they lost out on all the good deals that came along. So, I don't want to belabor this, but it's something we look at. It could affect what happens in the future, but in the meantime, there's a lot of good notes that you look at. You look at them on a one-on-one basis and go, this is a solid investment. Why? Because I really can't lose. Even if property values go down by 10%, 20%, I'm still safe. If this borrower has issues, I can work with the person or not. I'm making a good return. I'm looking at a person who's been making payments. Their payments are $600 a month, where rent or anything else would be twice that. Where are they going to go, sort of thing. You got to look at that and say, okay, this is a solid investment. I'm making way more than putting my money in a cash position, because if we do have inflation, of course, your dollars are worth less money. So it makes sense to put them in something that's growing. So again, focus on your individual economy a lot more than these other things that, quite frankly, are out of your control. What's in control is your local investments and your aptitude, your process of going through due diligence and putting your money at work on smart decisions.
No question. No question. I mean, I you have to look at trends. I think that's very important. And just like you mentioned right there, I mean, Back in 2009 or 19, it showed the uptick, but we didn't see a lot of non-performings then. And so
Yeah.
just because you think, oh, what's going to happen? Listen, the economy has to go through a cycle every 7 to 10 years. I mean, that's just what we see and what happens. But making a knee-jerk reaction or anticipating something's going to happen, you can't move the market. But you can be smart about what's going on. And I think, in case in point, um, follow the trends, see what's really happening. And I would tell you, quit listening so much to social media because uh, you made a great point. You search one thing and then it's going to constantly pop up. You switch off into woodworking. Next thing you know, you have 50 different things bombarding you about woodworking, So does that mean everybody's doing woodworking today? No, it's just what you've searched.
Hmm.
So just try and, you know, stay true to your plan and what it is that you're looking for and what you have set for yourself, and then follow that. I mean, I think that was good advice you gave.
Yeah. And again, I think the debt side right now is a better place to be than the equity side.
Hmm.
And that translates into stocks and bonds that also translate it into real estate. So you can see on real estate, again, we're just looking at factual numbers here. The US home turnover is at the lowest rate it's been in decades. And that means people aren't moving. People aren't selling properties the way they used to. And there's been a drastic fall off nationwide really since 2022 for those who can't see the chart. And it says home sales per 1,000 in the first 9 months of the year, and that's a 27.7. I mean, that's pretty dang low.
Yeah.
So there's other reasons for that too, right? People can't afford to sell and then move next door because interest rates. If somebody got a 2% loan, which many, many millions of people did, and now they sell that home to trade into another home. Well, that other home's going to have a 6%, 6% plus. So that makes it very challenging to do. And of course, that keeps the homes off the marketplace. As interest rates come down, a lot of people who are in the 7% interest rate bracket, as far as interest they're paying on the bank, they're going to refinance. They're not going to move. They're going to refinance in that same home because that same home has built up, some equity. So there's a lot of factors that are coming to play in real estate sales in general, and I think that translates more into where are real estate investors finding their properties. Now you would think, well, they're finding their properties under distressed sellers. Yes, that's always been the case. But the other part of this equation is we are not seeing an uptick in foreclosures, and we've talked a lot about that on this Watercooler Wednesday, where there are simply new government rules and regulations. They did change October 1st, but we're not going to see the effects of those for another 2 years. So the number of foreclosures is dramatically held back, dramatically. There's estimated over 6 million people plus that would normally be facing the foreclosure process, but that's been artificially held back because of government rules and regulations. Now, on the one hand, you can make the argument, well, good, they're trying to keep people in their homes. On the other side of the argument is, yeah, but now you've got people who understand the system. They aren't making payments. They haven't made payments in 5 years, and they just go from loan mod to loan mod to loan mod with no intent of ever paying it back. And who ends up paying for that? The taxpayers. So it's another burden on our national debt. And so again, there's arguments, yeah, on either side, but bottom
Hmm.
line is if you're in real estate and you're saying, well, where's all my inventory gone, or should I get into buying real estate and just accumulating property or rental property, it's going to be tough because not only is normal turnover low, but that trickles into where do we find these distressed sellers and how many of them are there, especially when they can go to a bank and get a loan modification just by asking. That makes it tough.
Yeah, it does. You just you, I don't know. I think that you just have to be more creative than the next person in today's market. You know, I talked to a guy
Yeah.
last week that lived in Abilene, Texas, in Abilene, excuse me, Texas, and he was a wholesale guy, and he did locally, and he says, I just don't understand really the note business because, you know, you guys talk about making this rate of return, and um, you know, I just go out and I wholesale deals, and how can I really make the rate of return that you're talking about in the note business? And I said, uh, first of all, I think you're limiting yourself just working in one designated area. I said, the note business, you can do this anywhere in the country. You can do it anywhere. And we have people that live abroad that do the note business here in the United States. And you have to be creative. It's going to take more time, no more time in regards to if you're not doing the note business, learning it's going to take a little bit more time and in doing your due diligence, but not to the point where it becomes, hey, I can't find anything in my own area. There's more availability in buying assets than if you're just focused on one area.
Mhm. Yeah, and going back to my equity versus debt argument, if you're buying properties, you're really in an equity position, right? You establish equity. It's right in what you do, right? That's where you're making a lot of your money. Sure, you might be renting the property, but you're also counting on the equity, the growth in that property versus the paying down on the debt. And there's nothing, again, nothing wrong with that. Many people make millions and have become millionaires in doing that. Nothing wrong with that. When economies change a little bit, that's where you can start to think of maybe I look at the debt side. And that, for an example, would be something like this. So this is a recent case study. Just over the last month, I guess we've been working on this. I don't think it's closed yet, this one here, but this is a property in North Carolina. And no, we haven't closed on this yet. It's just this is an example of we're not buying the property per se, although this one has a little twist to it. We're buying the debt really on the property. We're buying an IOU on that property. The person who lives in this house can sell the property, they get the equity in it. So this house is worth about 190,000 bucks, and they only owe $43,000. So they have a bunch of equity in this property that they're entitled to, but they have to pay the debt on this property if they want that equity. So this one they owe 43 and they're asking 41,000 for that. But again, it's a really nice looking property. That's something we are not going to buy, but that's our collateral. So when you're investing in the note business, this backs your investment. If the person stops paying on the debt, they're putting this collateral up at risk, meaning they would have to sell the house to pay you off, or it would be foreclosed on a forced sale to pay you off, or they could refinance in a case like this with that much equity. But bottom line is they need to pay the debt on the property. The people who own the debt are secured lenders. So we're in that first position. Secured lenders, whether it's stock market or real estate, we get paid first if things go wrong. Okay, we get paid first if things go wrong. So that's the strength that we have in being on this position is our investments backed by that. And our investment's going to be less than $41,000. So again, we go through, we look at all the properties and everything, and we go through and look at the seasoning. This person's been in the property, since 2013. It goes way back. They, I look at all the deeds, I look at the property taxes, all paid, that sort of thing. I look at the payment history on all of this, and yes, they ran into some problems and they were paying a little bit late. Okay, but now they're catching up, so they're making some extra payments on a voluntary basis. But if we were to cut this down and look at the overall investment, $40,000 investment backed by a $189,000 property, that
Mhm.
identifies our risk. We're in great condition. We're
Absolutely.
paying a little bit higher in the investment to balance because we're paying 93% of what the loan balance is. So we have a little bit of a discount in there, but that's almost to be expected in a deal like this where there's so much equity, so much protection, and we're still getting an 11% yield. So if we've got good seasoning, we've got good equity in a property, you can expect to pay more or let's say less of a discount. And that's what we're doing here. We're not getting much of a discount, 40,000 versus the balance of 41,000. So you can do the quick math on that. But look at our safety, our investment, rolling into this property, 22% of what it's worth. So
We're
extremely safe. You're making 11%. That's structured for 240 months. And think of it, where else could this person go and live in a house like this for 400 something dollars a month?
yeah.
They're
Where do you like to be for ITB?
ITV maxes out for me, and the way I teach my people is 7%, 70%, 70,
Hmm.
70%. That's our highest investment to value ratio. This one at 22 is, you look at this and go, well, I mean, how could you lose really?
Yeah,
You know, these folks are either going to stay and pay because their payments are only 400 something dollars a month. They may end up doing, hey, you know what? We now have the credit. We now have this, that, and the other. We're going to go to a bank and do a cash out refi. I could see them doing that.
absolutely.
Go to a bank. The house is worth 190, so they pull out $50,000. They pay off the underlying loan, and they take the 10 grand to fix up anything, whatever they need to do. That's a possibility. If things went horribly wrong and they simply got into a financial situation where there's no income coming in, they don't have a savings, what do they do? Well, the smart move would be, we'll sell the house. It's worth 190,000 bucks, pay off the
Sure.
40,000, leaves you with 150 grand. So this is not one that'll end up in any kind of foreclosure. It doesn't make sense that this would be foreclosed upon, because they've got the right to sell it at any point. And the look, people go through rough patches for all these other reasons that we started talking about, and these folks did for a little bit, but back on track, making extra payments, catching back up on the loan. So they're actually paying more than the $400 something a month. But that'll stop once they catch up. They'll drop back down to the 400, I would suspect. But
Yeah.
again, that's a sector that if you're not limited to geography, as you were saying before, and you realize that, look, you and you're in North Carolina, we still had to look up where this was.
Yeah, I did. I
You
had
know,
no idea, and it's
the
only an hour and a half from where I live, so I had no idea.
Yeah, I mean, so yeah, I've learned a lot about different cities in the U.S. from doing this. It's crazy, and it doesn't matter. I mean, what we look at in this industry is, well, tell me about the deal. What's in the deal? And when you see these numbers and you start to realize, I don't have to think local, local, local.
Right.
I can go somewhere else and think more like a bank. On if we need to have a local real estate agent go out here and do a BPO on this property to tell us what it's worth, okay, we'll do that. If we don't, we feel that the value's good, great. Again, it's not like we buy these things blindly at all. One of the things I'm known for in the industry is how to do due diligence the right way and be thorough on this. It's a reason still here, been around a long time.
For sure. No
But
question.
yeah. So, and that just shows you, I mean, all the other stuff going on. Okay, we're aware of it, but let's try to, filter that a little bit more, focus on you and your economy. This would be an investment that you're taking. Okay, my money is losing money in a bank right now because the banks aren't paying anything and inflation's higher than what you're probably getting interest. So you're losing money sitting on cash. You pop that into an investment like this, now all of a sudden you're making 11% less inflation, and there you go. And you're thinking, well, is it safe? I just showed you. It's how safe that was. So there are investments in good economies and bad economies that make a lot of sense. And the note industry, we're prepared for both, good or bad. So I don't
Yeah.
have to, worry about. I don't need to get out of my industry. I might have to tack my sail and head off a little different direction, if the winds change. How about that analogy, huh? You know, haven't done a sailing reference at you for a while there, Dwayne.
Uh, and two, don't get so wrapped up in, oh my goodness, I got to make this deal work. There are deals out there that you can make work with the parameters
Yeah,
that you have set.
yeah,
And and look at it this way too. You're not having to drive from one end of the town to the other end of town, and you know, gosh, there's going to be, I know, 10 other people that looked at this particular deal. um, you have to understand you're able to do this within your office and not travel anywhere. I mean, look at the ability, look at the creativity that you can have, and no one's saying that you have to get out of what you're doing, your wholesale business or rental business. This is just a bolt on to when I was speaking with the guy the other day, he was like, I need multi streams of income because I really want to be in my local market. Okay, that's fine and good, but let's look at how many deals that didn't work for you this year and figure out how we can be a little bit more creative. And let's say you did 3 or 4 of these deals, how would that have changed your bottom line at the end of the year? And he said significantly. And so um, eh, listen, it's a way to go. It's so many people are like we talked about earlier. I don't need to go down that road, but they're worried so much about the noise. Quit listening to all the noise and stay true to your plan is what I would get, the advice that I'd give you. So if somebody wants to work with you, Kevin, what's that look like?
well, again, I work with people on a couple of different levels. Um, 3 levels in general, but one of them is education only. So if you're looking for just education on this topic, I've got a fantastic program, a 20-hour program that is really the best in the industry. It's about $800, but if you're looking at, hey, is there something a little less expensive? You've got it's actually in November, and I'm going to be changing. I got to get my web guy, but I've got a couple of conferences and such I have to go teach at. But I still have those videos up for free, everybody. If you go to Kevin Shortell, KevinShortle.com, free. There's a 4 segment video series that is very good, probably better than most people's full day of training. And it's just, it's maybe an hour and a half or so. I can't recall, but we broke it into 4 pieces and to make it easy for you to watch. And that's available online. You just go on there, you fill out, you put in your name, email address, that sort of thing, automatically uploads to you. You can enjoy, or it gives you access. You can enjoy that free series. If you want to upgrade to a more intense training series, I've got that available. But most of my
And
clients, and
suppose, yeah, I was getting ready to say,
yeah,
and suppose somebody wants to,
yeah.
they're like, okay, listen, I need more than just watching some videos. I need to have collaboration and have you sit in my shirt pocket, so to say, and go through these deals like you talk about. What's that look like?
Yeah, that's what most of my clients do because for reasons that you just said, for a lot of people, having online access to education is great. They buy it and then they don't they're not disciplined enough to go through it. Number one, number two, if they do go through it, it's hard for them to take action on it, and that's when things change. Is when you start to take action on this, and that I help people with because I do one-on-one personal consulting. with people by Zoom. So we get on Zoom, we work together, we look at deals together, we troubleshoot deals, we go through documentation, we do all these things. And so essentially, you have an industry expert that you can schedule unlimited, by the way, one-on-one sessions with me, and we can go through whatever you need in the business. I mean, it's unbelievable, and, and nobody else in the industry, certainly of my caliber, offers anything like that. I've got all the details there as well. You can go to kevinshortell.com and we'll get you on Dwayne's schedule. We'll make a phone call with you, talk about that program, and then if you really want to go in and say, "Hey, is there any way I could just partner with you, Kevin, on deals?" Well, I do have an elite level, and on that level, yes, I will actually put my money in. And by the way, also very, very different than what other people in the industry do when they say that they're partnering with you. Most
Mm.
everybody in this industry, everybody I'm aware of, but I'm leaving a window open
Yes,
there, but
yes.
everyone I'm aware of, they will partner with you, but guess what? You put in 100% of the money and they get half of it. No, no, no. That's not something that I'm going to do at all. With me, I put in my own money in the deal, and I'm not going to take the lion's share of your deal. I might put in 10%, 15%, maybe even 20%, and this is something we would talk about, but then I'm only getting 5%, 10%, or 20% of the payment. But I'm also paying 5%, 10%, 20%
But
of the
you're doing all
expenses.
the work.
And I'm doing
And
all the
you're
work
doing
for
all
them.
the work. Yeah.
Yeah. So yeah, and I do all the work for them. So multiple layers on there, and again, this is a good time of the year. You start to see some of these bigger note funds that will start to clear out their portfolios, some of which are great deals, some of which are not great deals. You have to know the difference between the two, and then on into the new year. So yes, so reach
Yeah.
out. Just it all starts. Just go to the website. It's really simple, kevinshortell.com. Just sign up there. I
I'll
forget
go
what
through a
the
little questionnaire and
yeah.
that helps us. That helps us. So when we have a phone call with you, we understand where you are, so we don't have to spend a whole bunch of time going through, hey, what's important to you, what you know, what you don't know, what you've done, what you haven't done, and where we can dig right into giving you a clear understanding of a path. And so, also, I wanted to point out somebody works with you one on one and then decides, hey, I've done a couple deals, I've made some more money. I can always upgrade later on and partner up with you on these deals, correct?
Yeah, you got it.
Yeah.
You got it. So you can see right here, everybody, we're looking at the site. This is kevinshortell.com. A lot of information depending upon where you are as an investor. You can learn more about me if you need to, if you haven't heard about me, how it works. And then it even talks about the various training services that I mentioned to you there. And look, if you just say, hey, I just let me just schedule a call, let me shoot you an email. It's all the information's right on the first page there. So let us know and you know we're here to work with investors. This industry, there's it's impossible for the number of deals out there for everybody who's in the industry to buy. Okay,
Yeah.
so there's plenty of room in this industry, and it works better when there's more of us, quite frankly. So there you have it. So good lessons in there, and I hope you enjoyed this session, and look forward to putting together another one with you as well. Dwayne, thanks as always, as
Oh
well.
yeah, absolutely,
All right.
absolutely.
And we look forward to talking to you again real soon.